Welcome to Spidell's California Minute. I'm your host, Catherine Zidane, and this week we're covering the CalSavers program requirements and registration deadlines. For more information, order Spidell's on-demand webinar, Critical California Tax Issues, where, among other important California news, you can get complete information regarding the CalSavers program. You can find this on-demand webinar at caltax.com under the Webinars tab. The CalSavers program is a state-administered Roth-like retirement plan that many private employers are required to offer to their California employees if the employer does not provide its own retirement plan. There has been a phased-in registration requirement since September 30th, 2020. By June 30th, 2021, employers with more than 50 California W-2 employees were required to register with the CalSavers program. Employers with more than 5 employees, at least one of whom is at least age 18, will need to register by June 30th, 2022. This requirement has been under the radar for most businesses and tax professionals, but it's important to understand how this works to avoid any major penalties for failure to comply. California employers that offer a pension plan for their employees must still register as exempt for CalSavers. However, that employer may not offer the CalSavers program to their employees. We aren't sure why registration is required if participation isn't allowed, but that's what the law requires. To determine the employee thresholds, only California W-2 employees who are at least 18 years old are counted. The employees do not have to be permanent full-time employees. Part-time, seasonal, and short-term employees are also counted toward the threshold. The employee thresholds are based on the average number of employees for the prior year. So for 2021, you'll look at the business's average number of employees for 2020 based on the quarterly DE9C reports filed with the EDD, eliminating employees under age 18. Employers with employees in multiple states only count their California W-2 employees for purposes of computing the threshold. Within 30 days of registering, the employer needs to enter an employee roster into their CalSavers account, providing basic employee information like name, address, phone number, email address if available, and external payroll ID. This can be done manually on the CalSavers website or on an Excel spreadsheet available at calsavers.com. CalSavers will then contact the employees directly by email or mail to determine whether the employee will opt out, and if not, what their contribution rate will be. The contribution has to be a percentage rate, not a fixed dollar amount. If the employee does not respond to CalSavers within 30 days, the employee will be automatically enrolled in the program, and the employer will be required to begin withholding and submitting contributions to CalSavers at a default contribution rate of 5%. Employers that fail to comply with the program requirements will be subject to a $250 per employee penalty after receiving a notice of noncompliance from the FTB. The penalty increases to $500 per employee if the employer doesn't comply within 180 days. If you want to stay up to date with California tax news and information, subscribe to our monthly California tax letter. A subscription includes a searchable archive of back issues, plus access to the transcripts of this podcast. See a full list of benefits at caltax.com under the Publications tab. That's all for this week. Join us next time for another episode of Spidell's California Minute.